In October 2025, the EU voted to seize $300 billion in Russian assets. You see, first they froze it, then they used the profits. Now they want the principal. And that's the question that's suddenly on everyone's mind. Every nation holding US dollars is asking, are we next? Welcome to Voice on Pages, where economics meets reality. In the next few minutes, we're going to unpack how this one decision could trigger the most dangerous financial shift since the end of World War II. So, how in the world did we get here? Well, this wasn't some single rash decision. No, this was a deliberate, step-by-step climb up what you could call a financial escalation ladder, with each move taking us deeper and deeper into completely uncharted territory. It all kicked off back in February 2022. Within just 48 hours of the invasion of Ukraine, the West froze about $300 billion of Russia's central bank reserves. For 2 whole years, that money just sat there, untouched. But then in June 2024, the G7 found a pretty clever way to use it without actually seizing it. They approved a $50 billion loan to Ukraine, backed by the interest being generated by those assets. And that, right there, brings us to the final pivotal debate, taking the principal itself. Now, to really understand this whole debate, you have to know where this money actually is. While we call it a Western freeze, the vast majority, we're talking about 190 billion euros, is held in a single financial institution in Belgium called Euroclear. This puts the European Union right at the heart of this historic and, frankly, terrifying decision. So this is the really crucial part. You've got to understand these 3 stages. Stage 1, the freeze, was just a temporary hold. Ownership didn't change. Stage 2, using the profits, that was kind of a legal gray area, right? Russia still owned the main chunk of cash, but the West used the interest it was earning. But stage 3, seizing the principal, that is a total game changer. It shatters the long-standing rule that a country's core reserves are untouchable, and it could change the very idea of ownership in the global banking system. And that right there is why this is so much more than just another sanction. It's a direct challenge to a core principle of trust that has basically held the entire global financial system together for decades. Let's break down exactly why this is so different. To really get the gravity of this, we need to be clear on what central bank reserves even are. Just think of them as a country's ultimate savings account. It's the emergency fund, held in stable foreign currencies like the US dollar or the euro, to prove to the whole world that its own currency is solid and that it can pay its bills. It is the absolute bedrock of financial trust. Now look, freezing assets isn't new. It's happened before to Iran, Venezuela, Afghanistan. But there is a critical, massive difference here. Those sanctions targeted the assets of political governments. This time, the target is the central bank reserves of a major world power. Until now, these reserves were considered sacrosanct. It was like an unspoken rule, a gentleman's agreement in the international financial system. And breaking that rule is what makes this moment so incredibly consequential. And this, of course, raises the one question that is now being whispered in finance ministries all over the globe. If the West is willing to completely change the rules for Russia, who's to say they won't do it again? For countries holding literally trillions in US dollars and euros, this is not a hypothetical risk anymore. It's very, very real. And you better believe the world isn't just sitting around waiting to find out the answer. Oh, no. The reaction has already begun, and it's starting a domino effect that could completely reshape the flow of money around the planet. You don't have to look any further than China. For years, Beijing was one of the biggest foreign holders of U.S. debt. Look at this chart. Their holdings peaked at over $1.3 trillion. By 2024, that number had plunged to around $759 billion. Folks, this is not a market fluctuation. This is a strategic retreat. Right. This isn't just a market correction. It is a full-blown geopolitical strategy. Beijing saw the writing on the wall. They are systematically, deliberately reducing their exposure to the US dollar to protect themselves from the very risk that Russia is facing right now. They're hedging against a future where their own savings could be turned into a weapon against them. And it's not just about selling dollars. It's also about what they're buying instead. As this chart shows, central banks all over the world have been on an absolute gold buying spree. We're talking over 1,000 tons for 3 years straight, the highest levels we've seen in more than 50 years. And why? Simple. Gold is the ultimate neutral asset. It's nobody's liability, and you can't freeze it with a press of a button. This quote just perfectly captures what's happening. As trust in the dollar-based system starts to crack, nations aren't just hedging their bets. They're actively building a whole new alternative. You could call it a financial escape hatch. Yeah, the BRICS nations, they are literally building the plumbing for a parallel financial system. China's got something called SIPS, which is its alternative to the SWIFT network that underpins, well, everything. Russia has its own version, SPFS, and together they're building something called BRICS Bridge, a digital platform to make payments completely outside the dollar system. And make no mistake, this bloc has the economic muscle to make it happen. The expanded BRICS now represents nearly half the world's population, over a third of global GDP, and it controls over 40% of the world's oil production. This is a group with the scale and the resources to create a real credible alternative. And then you've got major players like India, who are kind of carving out their own path of strategic neutrality. With over $600 billion in foreign reserves, India is quietly diversifying its holdings. At the same time, it's become a top buyer of discounted Russian oil, often paying in its own currency. The strategy is pretty clear: stay independent and gain economic leverage in a world where financial power is shifting. So, what are the long-term consequences of all this? What's the fallout from this great unwinding? Well, we could be talking about the end of an 80-year era of American financial dominance. If you look at history, it shows us that being the world's reserve currency isn't a permanent gig. The Dutch guilder had its day, then the British pound. The average reign lasts about 94 years. The US dollar? It's been on top for 80. History doesn't repeat itself, but it often rhymes. And when you weaponize the world's money, people start looking for new money. And losing that top spot means losing what's been called America's exorbitant privilege. This is basically the superpower to print money that the rest of the world needs, to run massive deficits without an immediate collapse, and to have immense geopolitical power through control of systems like SWIFT. The stakes for the US really could not be higher. So, where does this all lead? What's the end game here? While nobody can predict the future, it looks like there are three broad scenarios emerging for the future of money. Okay, the first and probably most likely scenario is a slow shift, a gradual, maybe 10 to 20-year diversification as countries move their reserves and this new BRICS system gets fully online. The second possibility is a dual system, where the dollar is still important, but it has to coexist with a new challenger. And the third, the most dangerous, is a crisis collapse, where some sudden geopolitical shock triggers a panic and a mass stampede out of dollar assets. One thing is absolutely certain. The decision to cross that line from freezing assets to actually seizing them has set a powerful, powerful precedent. The alternatives to the current system, they aren't just theory anymore. They are actively being built. And the clock on the old financial order is definitely ticking. In the end, this isn't really just about Russia's frozen assets. It's about the future of money itself. So what do you think? Will the dollar stay the undisputed king? Or are we already witnessing the dawn of a new multipolar financial world? Let us know what you think. Thanks for tuning in.